Welcome to our monthly real estate market update. In this video, we'll be taking a closer look at the latest trends and statistics in the housing market. From home prices to inventory levels, our team of real estate agents will provide you with the information you need to stay informed and make informed decisions about buying or selling a home. Here at the Exclusive Lifestyle Group, our job is to keep you updated on what's going on in the real estate market, both locally here in Atlanta and nationally. Our goal is to be your #1 source for all things real estate. So sit back, relax, and let's dive into the latest information together. Thanks for watching.
What's up, everybody? Welcome to your National Monthly Market Report for January 2023. Happy New Year! My name is Malik with the Exclusive Lifestyle Group, brokered by eXp Realty. It's a new year, new possibilities, new opportunities, and in this video I'm going to walk you through several of the most important topics we should be talking about in the housing market as we start the new year. You know, I want to say this as we kick off the new year. First of all, and let me make myself a little smaller here. There we go. Put me up in the corner. First off, I want to big thank you to everybody that invests time and energy into watching our monthly market reports every month and understanding what it takes to be one of the most educated real estate teams in our market and the value of that and what it brings, what it means to all the homeowners that we work with, families buying, selling homes all over the country, not just here in Atlanta. I mean, if we think about supply increasing over the past year, demand decreasing, it provides this opportunity to help you understand what's going on. And that's what I'm here for. So I want to start in and maybe give a little bit of context and to go back to a topic that we talked about last month, and that's mortgage rates. And give you a little bit of context, maybe a reminder of a few things that we talked about, but also another way to look at it. Let's start here with the reality of last year, 2022, and that is the 30-year fixed rate in this country doubled over the past year. We started 2022 at 3.2% back in January of last year, and we ended up right about 6.4% as we wrapped up the year. Never seen a year like that in this country where the mortgage rate doubled. All of that certainly has impacted the market. It's impacted people psychologically. People call us all the time and they're seeing these alarming headlines in the news and they just want to know what TF is going on. So let me help you break it down. Last month, we really broke down the relationship between the 30-year fixed mortgage rate in this country and the 10-year Treasury yield. If you remember, we talked about how it's all about the spread. Everything is about the spread. We went through the examples of why rates are not at 5.5%. I'll bring that slide back up. If we go back to the year 2000 through 2021, really the past 21 years, and we see the average 10-year Treasury was 3.49%. The spread there, 1.79%, giving us an average mortgage rate of 5.28%. So you take that Treasury, you add 1.79%, and you get the average mortgage rate. And that average over the last 20 years has been 1.79%. And then we talked about how over the last couple of years, that's fluctuated. But certainly in the last year, we've seen that spread rise to where today, 10-year Treasury, 3.69%, the spread, 2.79%, giving us a mortgage rate right now, as of this recent posting from Freddie Mac, 6.48%. Let's call that 6.5%. So that spread has widened over the last year. Now, if we take this as an idea, then the answer to that is, as that spread decreases, we see lower mortgage rates. And if the spread were normal today, we'd see an interest rate of just under 5.5%. Now, we talked about all of that last month. I'm going to go over it again briefly so you have an understanding of it. I'm going to give you a slightly different look at it because I think this is really, really important as we keep you educated on what the market is doing. Here would be my message right now. The spread between the 10-year Treasury and the 30-year fixed mortgage is a measure of volatility and panic. And that panic is starting to subside. That's good news for the long-term interest rates. We've seen a little bit of relief over the last 6 or 7 weeks and a couple of chip ups in the last few weeks, but certainly up and down volatile right now. But if you look at the spread the last year, we started in January 2021 and the spread's been as panic entered the market. If I make this a little bit lighter and then draw in an arrow, the first part of the year last year, we saw folks getting more uncertain about the economy, things happening and panic entering the equation and in our world economically. And then around June of last year, if you remember, the Fed came out and they said, we don't have this under control. We want to reset the housing market. We covered that extensively and we saw the panic go up again. And then we came to the end of last year and we start to see the panic subsiding and people and experts, economists, the Fed saying maybe the peak of inflation is behind us. Now, I'm not here to say it's all about inflation, and we need to not do anything about that. I think that there are some very real things that we can do. But the bottom line is there's still about a 1% difference between where that spread sits today and where it has sat historically. So as we do a better job of helping to take the panic out of the market, we'll see that spread lower. Here's the bottom line. As we see that volatility, we see panic starting to come down in the market. Here's a couple of perspectives I want to give you about opportunity right now. First is from Lawrence Young. The upcoming months should see a return of buyers, as mortgage rates appear to have already peaked and have been coming down since mid-November. We've talked about that. I want to remind you of that. One of the premier thinkers in the mortgage business, Dave Stevens, former Assistant Secretary of Housing, he said this, and I think it's very important that we take note of it. He said, so be advised, this may be the one and only window for the next few years to get into a buyer's market. And remember, as Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. Long-term homeowners should view this market right now as a unique buy-in opportunity. Now, I started off this video saying, Happy New Year to new possibilities, new opportunities. And there is definitely opportunity in this market. Now, I'm going to get there in the next few minutes, what I believe is the biggest opportunity. But for the long-term homeowner, this is an opportunity. This is an opportunity we haven't seen over the last couple of years. Now, I think there are things that stand in people's way and concerns and all of that, and I want to address those. But I think if we miss this opportunity, we miss what this market can bring us. One of those concerns, and we talked extensively last month about it, was home prices. I want to give you a little update on that, the forecasts that are coming out, and a little perspective and some things that we're seeing in the market. First, the one thing that is very true right now about forecasts for home prices this year is that none of the experts agree. This right here is a look at the forecasters that we follow. They go anywhere from forecasting a depreciation of 5% this year to an appreciation of 5%. The important thing to remember right here is that we don't see any of these reputable forecasters calling for a free fall or a crash in home prices. It's just nobody's forecasting that. One of the interesting things that has been published recently was an article in the Wall Street Journal where they looked at home price appreciation before the pandemic and after the pandemic. And if you look at before the pandemic, from the fall of 2017 up until spring of 2020, about 12% home price appreciation in just that 2.5 year time span. If you think about the 2.5 years going into the fall of 2022, since the beginning of the pandemic, what did we see? a tremendous amount of appreciation across the country in residential real estate. 38%. That's how much home prices went up. So would it make sense that in some markets and in some cases, we would see a little bit of that come back down? Absolutely we would. But again, it's not a free fall in prices like some people are saying. People in the media, maybe people on YouTube, other places like that who don't really know the market or study home prices in the market every day. Another fact that people think about in prices is that every home out there on the market right now is reducing their price. I've heard that. Guess what? Totally not true. If you look at this, the share of homes having their price reduced, and this chart goes all the way back to 2021 at the height of the most recent information that we from Realtor.com have in November, was that only just over 1% of homes having a price reduction in the market. So again, not a free fall, not a housing crash, not a situation where we're seeing every home or a great majority of the homes drop prices. Only about 1%. One of the questions I would certainly put on the table right now is this question. Have homes hit their bottom? Here's the answer. This is a look right now at Case-Shiller, FHFA, Black Knight, and CoreLogic in their month-over-month home value change. If you isolate the last 4 months that have been published, what we see in each case, the depreciation peaked back in August. Now, I'm not here to say we're out of the woods, but what I am here to say is that home price depreciation is not in a free fall. As we go through November, December, we'll get this information. It runs in arrears. It's the best possible information for home prices. But what I'm saying is you're not seeing it drop or continue to drop. We may see a little bit here and there and coming forward, but this is not a crazy drop in home prices. We're going to continue to follow it, and I want you to stay tuned every month so we can stay on top of it. But these are things that people who are thinking about buying are asking right now. People who are thinking about selling the home that they live in and maybe move up to a bigger home. These are the things they are asking right now. Here's the bottom line. You take the December existing sales report, the most recent one, and it's simple. Over 100,000 homes sell every day in this country. Last year, there were just over 4 million homes sold in the country. Divide that by 365, and that's 11,000 homes every day. This market is not dead by any means, so please don't let the headlines fool you. That also means that 8 houses sell in this country every minute. So if somebody wastes your time for 10 minutes talking about how nothing's selling, the market is going down, they waiting for homes to crash because they saw some article that used a scary headline as clickbait so that they could fill you with fear and panic, you can tell them, you know what? While I've been sitting here listening to you with all this nonsense, 80 homes have sold. Remember, as we see panic subside, we'll start to see more advantageous mortgage rates out there. And we're starting to see more alternate means of financing. I think that's critically important right now. Adjustable rate mortgages and rate buy downs, a 2-to-1 buy down, or a seller concession that's applied to a buy down is very, very advantageous for those looking to buy right now. And just a couple of thoughts on that. First, from the Urban Land Institute, they say the risk of ARMs, adjustable rate mortgages, was substantially mitigated by the regulatory reforms put in place after the 2008 bust. Today's adjustable rate mortgage is not the risky products of 2008 or even the pre-bubble version. ARMs are no longer something to fear. In fact, they could help home buyers save money and reduce barriers to home ownership. If you think about rate buy downs, this comes from Real Estate News. Temporary rate buydowns are a hot trend for mortgages as borrowers face higher costs for home loans. Some buyers are exploring alternatives to traditional mortgages in a period of rising interest rates that's expected to continue into 2023. Buydowns are a less costly alternative to traditional fixed rate mortgage. So whether it's a buydown, whether it's an adjustable rate mortgage or some other alternative form of finance in a home, as a team, we are focused on, okay, how do we help buyers in this market discover these opportunities to finance and to be able to purchase homes? I think that's critically important. And we'll stay focused on that goal as we go into this year. I'm going to wrap up here just a moment with what I believe is the biggest opportunity right now. It's a new year, there's new opportunity, and I think looking at this, there's an insight into probably one of the most opportunistic situations in real estate as we speak. I want to break it down this way. As you start to look at information and the data that's out there, one thing becomes true. Active listings over the past 2 years have grown. We wrapped up 2021 with just about 450,000 active listings in this country. The latest information we have for 2022 is that we wrapped up with just about 750,000 listings. So that's the first point. We have more listings today, but what else do we know? Pending listings have decreased every month since the beginning of 2021. They were stable month over month from February to March, but in each month have trickled down, meaning pending listings is an indicator of velocity and demand in the market. So if there's less pending listings, that means less sales. So you have inventory increasing pending or demand decreasing. So what does that mean? The biggest opportunity for a home buyer right now, if you can successfully navigate this new landscape of slightly higher rates, maybe by even securing alternative means of financing, with the increasing supply of homes on the market and less competition from other buyers in the market competing against you for the best homes, 2023 could be your year. So as always, we want to give you the resources you need to make the decisions to be informed, to be a confident and knowledgeable consumer that you need to be in order to make the best decisions for your family. We normally send these updates out to those 10,000 of you who are currently on our email list, but we decided to start also putting them on YouTube this year. But the best way to stay up to date with the content we put out is to subscribe to our email list, subscribe to this YouTube channel. And it would really make my heart smile if you gave this video a like. We'll be back next month. And as always, we are grateful to you watching. We are grateful for you investing this time into understanding what's going on in the market and what it looks like to master the opportunities in real estate that this year will bring. Until next time, Happy New Year, everybody, because I'm out of time.